Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Hey, Fidelity. How can I remember to invest every month?
With the Fidelity app, you can choose a schedule and set up recurring investments in stocks and ETFs.
Oh, that sounds easier than I thought.
You got this.
Yeah, I do. Now, where did I put my keys?
You will find them where you left them.
Investing involves risk, including risk of loss. Fidelity Brokerage Services, LLC, member NYSE, SIPC.
Hello and welcome to episode 959 of FinTech Insider. I'm Benjamin Ensor, Director of Research and Strategy at 11FS. Now, in what will be no surprise to any parents of young children listening, but is news to me, this week Jack Black's Minecraft movie meme song, Steve's Lava Chicken, has become the shortest track ever to enter the Billboard Hot 100 chart. While that's breaking records in music, we're turning our attention to a host of companies breaking records in fintech as we dive into the biggest stories from across the industry this week. To help, I am joined by a great panel of guests. First up, we have a FinTech Insider debut for Steve Quirk, Chief Brokerage Officer at Robinhood. Welcome to the show. We know you got some exciting news that we'll get to very, very soon, but could you tell our listeners a little bit about what your role is at Robinhood? And I'm guessing most of our listeners probably know what Robinhood is, but can you tell us a little bit what you do there? So welcome.
Thank you. Thank you for having me. First time, by the way, which I'm very excited about. I'm the Chief Brokerage Officer at Robinhood. So what that would encompass is, all of the products and technologies that we make available for our self-directed retail customers. We would be responsible for building those or offering those. And then all the people that interact with those customers in whatever format that is, whether that's via the phone or chat or email. And then everything that sort of flows down from that. So think about the AML, the fraud, the order routing, and all of the what I'll call the plumbing that happens after a customer would make a decision to invest in a stock or an option or put money to work in one of our yield products would come through our organization. And we're about 25.8 million customers, largely younger. Average age is just over 30. And about half of them are first-time investors. So there's we do a lot in the way of education and helping them understand how to navigate markets, which I'm sure we're going to talk about today.
Fantastic. Well, welcome to the podcast. We're also delighted that next up we have a return to the podcast for Miguel Armaza, General Partner at Gilgamesh Ventures. It's great to have you back on the show, Miguel. Please, could you also remind our listeners a little bit about you and a little bit about Gilgamesh?
Thank you, and delighted to be back. My name is Miguel Armaza. I am the co-founder of Gilgamesh Ventures, where we invest at the pre-seed and seed levels of fintech startups, right? About a third of our companies are based in New York City, and which is where we are based, but the rest are pretty much all over the world at this point. And I also host the Fintech Leaders podcast. So from one podcaster to another. Thank you.
Nice. And we're also delighted to welcome back to the show Kate Drew, Director of Research at CCG Catalyst. It's always great to have you on the show with us, Kate. Can you let our listeners who haven't come across you before know a little bit about you and a little bit about CCG, please?
Absolutely. First of all, thank you so much for having me back. I'm always happy to join you. CCG Catalyst is a boutique financial services consulting firm based in the U.S. We help banks strategically plan for the future and execute on those plans effectively. And I lead research for the firm, both on the client side, and I'm responsible for our market intelligence hub, CCG Insights.
Fantastic. Thank you. Well, welcome to you all. So we have a panel, so let's dive into the news. So our top story this week is that Robinhood has topped estimates amid volatility as crypto slows. This is reported all over the place, in Bloomberg, among others. So earlier this month, you might remember that we covered Robinhood's move into wealth management and private banking through the Robinhood Gold offering to enhance its customers' experience. So today we're going to take a closer look at this move and speak to Steve, who you've just heard introducing himself, who's the Chief Brokerage Officer, to learn more about how the product suite is supporting long-term investors. Robinhood has also released its results from Q1. Some highlights of these include increases in both revenue and net profit, rising to $927 million and $336 million in profit, respectively. Robinhood Gold has also had an increase in subscriptions by 1.5 million, or 90% year over year, to reach 3.2 million customers. Steve, it's great to have you with us. Can you tell us a little bit about these Q1 results that have just come out and what they mean for Robinhood? What are you really pleased about?
I think the big question that the industry and our analysts and the community was curious about was, how is all this volatility and all the moves and all the tariff news and geopolitical things that are happening impacting the psyche of a retail investor? And as I said earlier, we have close to 26 million young investors, and a lot of these investors are first-time brokerage customers. So it's their first time investing, and for some of them, first time navigating the volatility that we've seen. So I think the analysts in the community was keen to see how they were behaving. And as you can see by the results, our customers largely are kind of, they look for opportunities to buy dips, but they almost act as portfolio managers. When they see good appreciation on some of the names that are most popularly held here, the Amazons or NVIDIAs, they tend to roll out of portions of those. And then when they see opportunities with other names that they feel have been depressed, they'll roll into those. And so what I think everybody was looking to see broadly across, retail investors was, are they weathering this? Is this something that is causing them to sort of pull back? But we do a lot of education, as I said, to kind of point out to people, like, they're all very young, so they have a very long investing career ahead of themselves. And if you just look at historical returns and the idea that you continue to, put money to work through thick and thin, in the long run, if you do it in a suitable manner, it's going to benefit you. So I think that was the part that was most important for us. We want to see that too. We want to make sure that our customers fare well. So we do everything in our power to do that. But then, when you see the results and how engaged the customers are, you realize that they're sort of treating this as, it's an episodic thing. It might persist for longer than they would like, but they're going to navigate it.
Thank you. It's good to hear you sort of talking about, trying to protect and look after your customers, because obviously that is really important in times of volatility. Kate, I'd love to bring you in. There's always been a bit of a sort of generalization in the industry that sort of volatility can be good for brokerage firms because it sort of encourages sort of trading activity, whether people are buying or selling, and that sort of is good for brokerage firms. Do you think that's true in this case? Do you think the volatility, and we've had a fair amount of volatility, as Steve said, do you think that's been good for Robinhood and its investors, or do you think it's a bit of a mixed blessing?
I think it depends on, like Steve said, how your investors and how your traders are reacting to it. And that really comes back to that point about education. I think one of the things that is so great about Robinhood is its ability to bring investing and trading to so many more people and to so many young people and to so many people who don't have experience with it. The flip side of that is they're not necessarily going to understand, that markets are cyclical, that you really need to have a long-term view, especially when you're young. I mean, when you're in your 20s, you do not have a long-term view. I mean, that's simply not true, especially not financially. So I think the ability to invest in that education and to help them through this is really, really important. And that will ultimately, tell us, whether it's been good or bad. It's not so much a question, I don't think, of good or bad, but, the ability to take the right lens on it, the ability of the company to take the right lens on it, and the ability ultimately of the customers to take the right lens on it. And it sounds like, at least for now, that's what's happening.
Steve, I'd love to hear more about what you're doing at Robinhood to sort of try and help your customers make the right decisions, because it's not always obvious what the right decision is when you've got this kind of volatility in the markets. How are you trying to help them make smart decisions rather than sort of rash decisions that they might later regret?
We the the age demographic of our customers leads to I came from Schwab, where the customers are TD Ameritrade, where customers are older. Their average age is about 55. And so the way that they digest content and get education is very different than this generation. They want it in the pathway of their research, or they're looking for opportunities, and they want it on demand, when they want to view it. And so we have a whole bunch of learn articles. We have a whole bunch of what I'll call videos within the pathway that help them understand. And then we just illustrate that, look, if you ever get to a point where you're uncomfortable in any of your investments, you have an opportunity to just roll into cash. And we provide a high yield sweep account, which pays 4%. 4% is better than earning whatever you earn, a 0.1% in a bank today. And you can just sit it out and wait till you feel more comfortable in an investing environment that is more suitable for you. So I think, like, they're self-directed, so we're not in the business of making recommendations. That's not what we do. They're making these decisions. But we also do have some products that help people. So in other words, if I'm brand new to investing and I open a retirement account with Robinhood and I say, I just don't even know what to do, we'll provide you a recommended portfolio, which consists of, low cost ETFs that gives you a broad exposure to whatever you're interested in a diversified manner. And there are some people who elect to do that. So it's more about providing them access to whatever they need with respect to their their knowledge base, or how much experience they have.
Miguel, I'd love to get your view on this as someone who lives in New York, on how Robinhood is sort of taking on the established brokerages. And what do you think of these results and of Robinhood's strategy?
I think it's impressive. I mean, to grow 50% year over year at the scale that Robinhood already has, and to grow, I think total platform assets grew 70%. I mean, we're talking about numbers that are appealing for a Series B or C company, but a publicly traded one, it's even more interesting. What I think about the brand, I mean, they're clearly going after Steve's old employers, but at the same time, I think it goes beyond that. I think, from my point of view, Robinhood is also going after Amex, right? I mean, there is some prestige to having that Amex, even the I think it's called the Platinum one, let alone the Black card, right? I think Robinhood is trying to create that same prestige, but for my generation, essentially, right? And I see it. I might not be a power user, but I have a lot of friends who are. And if you can get Met Gala access, Formula One perks, or whatever else Robinhood is going to provide, that becomes appealing. So it's about the experience. It's about the brand, that you want to be associated with a cool brand. And Robinhood is clearly trying to become that. So it's a mix of the legacy brands, right? Packaged all in one, trying to kind of replace and get a share, especially for the younger generation. So, it's exciting to watch. I that's the kind of company I want to invest in when I'm looking to invest in pre-seed seed.
Excellent. Steve, I'm sure you're not going after any specific competitors. One of the things I think you have been going after is sort of diversification and trying to diversify. Can you tell us a little bit about Robinhood's sort of strategy to try and sort of diversify how you're helping your customers?
Sure. So the success that Robinhood's had to date has largely been through self-directed investing. So if you think about the universe of self-directed investing, it's X. This is how big the population, I'm speaking mostly about the US right now. The number is like X number of people that are interested in doing this themselves without any assistance. The number of people that want some assistance, either somebody to completely help them advise their investing decisions or partially help them, is like 3 times the number of people that do it on the self-directed side. So Robinhood's been great at disrupting the self-directed side and doing it in a manner which just removed all the friction. You don't have to wait till you have $5,000 to invest. There's no commission. You can open an account with $50. There shouldn't be these impediments that dictate that you have to wait till you're 40 years old with a pool of investable assets before you can start making your money work for you. So I think we've been very successful in that realm. And, and again, we're at almost 26 million customers. My previous employers, that took 6 or 7 decades to get there. Robinhood got there in, 4 short years. That's when really the majority of the growth happened. But now we've set our sights on delivering for our customers, because there are a large group of our customers that actually will tell us, "Hey, listen, I'm now at this point in my career. I'm at that point where I'm in my maximum earning journey, and I just either am very busy. I now have kids, or I'm just not comfortable investing all the money that I have right now, and I would like somebody to help." Either automated fashion or an actual person. So that's kind of what we're setting out on the next part of the journey right now, which is, we rolled out an advisory product, a low-cost advisory product. And I would argue, like, if you look at the wealth advisory space, it's been kind of stagnant. I think the robo-advisors came out in 2010. If on the RIA side, the registered investment advisor side, most of the firms that pop up as new entrants, they just get gobbled up by the duopoly of Schwab Fidelity, which is what happened to TD Ameritrade. And so, like, we hear loud and clear from our customers that they would like to have options to find, somebody that can help them partially or completely. But we also hear loud and clear from advisors that say, man, we would love to see a new entrant that would sort of provide alternative methods for the next generation to be able to invest. And the final thing I'll conclude with is there's this massive wealth transfer that's happening. It's already started in the US. There's $124 trillion that are getting passed down a generation, or this is really interesting, or 2 generations, because a lot of the people now are living to a point where when they start thinking about passing their wealth down, their children are at an age and at a place where they actually don't need that wealth. So they're skipping them and going to their kids, right? And those people are Robinhood. And these advisors this is a known statistic, like 70% of the people, when they are granted wealth, either through divorce or a life event or their parents passing, they fire their advisor. because they don't have that connectivity with them. So we want to give advisors today an opportunity to connect with this generation that's going to be the recipient of that $124 trillion wealth transfer. It's going to be so transformative in the way that investing is done when this money moves. And I think it's just a unique opportunity to kind of recreate the space.
Fantastic. Well, congratulations, Steve, to you, all of your team and your colleagues at Robinhood on these impressive results. And I'm sure we're going to be hearing and talking, more about Robinhood's achievements over the next couple of years. So let's move on from one hugely successful fintech company to another hugely successful fintech company, because our next story is about Nubank receiving a banking license approval in Mexico. So Mexico's National Banking and Securities Commission has approved Nubank Mexico's banking license, enabling the firm to evolve from its current Popular Financial Society, or SOFIPO, into a full-service bank. Now, Nubank entered Mexico with a no-fee credit card in 2020 and has since added a debit account, savings accounts, and personal loans. It's won more than 10 million customers and $4.5 billion in deposits by the end of 2024. So one of the most successful digital banks in the world, Nubank now serves more than 114 million customers worldwide, almost all in Latin America. A banking license will enable Nubank to offer increased deposit limits and a payroll account, as well as multiplying deposit insurance coverage by 16 times through the Institute for the Protection of Bank Savings. So why is this significant now? Miguel, let's bring you in on this one. To start with, why is Nubank needing a banking license? They've got 10 million Mexican customers already. It doesn't sound like they were being really held back. What do you think this brings them?
Really good question, and there is some nuance here. Nubank previously had secured a different license. Let's call it banking light license. In Mexico, that's called a SOFIPO. Now they've graduated to the big leagues, right? Now they have the full banking license, just like pick your large bank in Mexico. So what does this mean? It means they can offer a larger gamut of products, right? It can be payroll accounts, mortgages, on top of their existing products, FX services. So it's the full license. And so it gives them freedom to compete at every single level. We talk about the unbundling. Yes, they started with the credit card. This is the full rebundling. Now they can do everything in Mexico, and that's what they're going to do. Additionally, they can accept larger deposits, right? There was a limit of the deposit insurance that they could provide with the SOFIPO. Now that changes, and they're on par with every single financial institution. So that's why this is meaningful. And it's interesting. Nubank obviously started in Brazil. That's where 80 to 90% of their customers are located today. Mexico becoming more and more important every day. I believe it's 10 million you mentioned. What I'm excited about is they have publicly announced that they want to start looking beyond Latin America, right? They've made some moves already, an investment in, I believe it's called Time Bank, right? With operations in Africa and Southeast Asia. But I think there's more to come. And so Mexico is going to continue to be important, and they still have tens of millions of potential customers there. But maybe if we fast forward 10, 20 years, the bulk of their growth might come from outside of Latin America. So I'm excited to watch.
It's a very exciting story. Steve, it sounds like, when you listen to Miguel, it sounds like they're copying your strategy. I mean, in the sense that they're diversifying, trying to add more products, use their new license. Do you recognize some of what they're doing?
I watched them for a while. They're super impressive. But I think expanding, this is a little bit of what we're doing as well. Like, a lot of what we've done has been limited to the U.S., and we've just really started to try and think about opening it up to the globe, and that's across all of the things that we're doing. So I commend them. It's been impressive.
What do you think, Kate? What's your take on this story?
I think that Nubank is giving every indication that it will replicate in Mexico and elsewhere in Latin America what it did in Brazil. I think the reason for that is really because it solves a burning need in what it's doing. It provides clean digital banking in places where that doesn't exist. And if you'll indulge me for a second, I just want to tell a short story. A couple of years ago, I was in South America. I was in Brazil, and I had a tour guide there, and I was talking to him about Nubank. And I asked him, what he liked about it. And he said, because it's really easy to get my money in and out, and it's really easy for me to use. Those were the two things he told me. And I kept prodding him on this, right? The researcher in me. And he kept coming back to those two things. And it's really that simple. I think, coming from the US, or, a more developed market, it's easy to forget that basic digital banking doesn't exist everywhere the way that it does here. And the ability to provide that, in a market where, people are hungry for it, which was true in Brazil and I believe is also true in Mexico, it's I think has been absolutely central to Nubank's success. How that will translate when it starts to expand geographically, I'm not sure. I think it's going to have to be really, really smart about where it goes because of how central, that aspect has been to its strategy. But I've heard rumblings about it may be looking at the U.S. and I think I don't know, exactly what that would look like because the U.S. is such a tough market and we do have, those kinds of services here already. But I think for what it's doing where it is and the needs of those markets, it's absolutely fantastic.
Indeed. Miguel, do you think in Mexico, Nubank's opportunity is helping more of the sort of underserved customers, maybe younger customers, or people who haven't got sort of bank accounts and credit cards today? Or do you think actually it's going to be going more for the sort of the middle classes, the people who are already being served by established Mexican banks? Or is it going to do both of those things? Where do you think it may grow in Mexico?
Yeah, I think if we look at where they're growing today, there is a segment of their customers that is in the middle of the pyramid, right? That maybe this is not their first bank account. But there's also a segment for Nubank that this is their first credit card, for their customer. And so that, I think that's kind of the band where they're going to be playing. It's going to be a while until they go to the very bottom of the pyramid. And it's also going to be a while until they can crack the highest levels, right? So they're looking for kind of the fatty middle, and it's interesting what's happening in Mexico because you can think of Nubank as a Brazilian company. There's also groups from all over the world with different companies competing against each other. There's a group backed by Russian investors. There's a group backed by Chinese investors. There's a group backed by American investors. There's the homegrown ones. So it's a contested market. And Nubank, of course, they have the technology advantage in some cases, like Kate was mentioning, but they have the branding advantage, right? Plus, when they went public, Mexico was already an important part of the strategy. And they dedicated hundreds of millions of dollars to train their credit models specifically in Mexico. So for a while, there was some criticism that their book wasn't looking too good, their lending book, but that's improved. And I think that was part of the plan.
I just want to say I completely agree on that branding point because I think in a market like Mexico, where there's deep distrust of financial institutions, the ability to earn that trust is so important. And I think, I think Nubank has invested a lot of money in that side of it too. they've even said that, their biggest competitor is cash, right? So they really have to like earn the trust of people to bank with them. And I think, obviously the metrics are a testament to they've been successful there and probably will continue to be.
They've been just astonishingly successful, haven't they? I mean, they're just one of the big global fintech success stories. You just look at them and think, wow, how do they keep growing that fast? A bit like you said, Miguel, about Robinhood. It's like, how do they keep growing that fast? But these are big countries, I suppose. That's part of the answer, right? There's a lot of people in Mexico, and there's a lot of opportunity there, right? Okay, well, on that note, we are going to take a very quick pause here, and we will be back very shortly.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alica Bank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.
As a contractor, I don't pay for materials I don't use. So why would I pay for stuff I don't need in my mobile plan? That's why the new MyBiz plan from Verizon Business is so perfect. Now I can choose exactly what I want, and I only pay for what I need.
Right now, with MyBiz plan, get our best price, as low as $25 a line. Visit verizon.com/business to get started today. Price per month with 5+ lines. Includes autopay and paper-free billing and special intro offer discounts. Taxes, fees, economic adjustment charge, and terms apply. Offers end June 10th, 2025.
So welcome back. Our next story is that Thunes has raised $150 million in Series D. Singapore-based cross-border payments company Thunes has raised $150 million in a Series D funding round led by Apis Partners and Vitruvian Partners. The funds will support Thunes' expansion into the United States, where the company recently acquired payment licenses in all 50 states, pending regulatory approval. Chief Executive Florista Court highlighted the company's strong financial performance as a sign of sustainable growth. And Thunes has built what it calls a direct global network in over 130 countries, with more than 7 billion mobile wallets and bank accounts that it can connect to. The new capital will fund innovations in artificial intelligence and digital asset interoperability as Thunes looks to strengthen its global network. So this is a big raise. Kate, do you think investors are excited in the opportunity for cross-border payments? It seems funny in a sense because we've got a world where Trump is perhaps trying to sort of discourage cross-border trade. But, here we've got investors saying, hey, no, there's a great opportunity here to simplify cross-border payments.
Well, right, because there's a huge opportunity where there's a huge pain point. And I think the big issue with cross-border payments is that they are slow and expensive and painful. And this has always been where fintech really shines because technology speeds things up and makes them cheaper. So it may, from an investor perspective, and, I'd be interested in Miguel's thoughts on this, it may be as simple as that there's a real problem here. It can be articulated and companies are solving for it. I also think generally we're starting to see a real shift or maybe a continued shift in fintech toward infrastructure plays, whether that's payments or elsewhere. So we recently saw Synctera and Treasury Prime raise big rounds there in the banking as a service space. Plaid just raised $575 million. So I think, as we're sort of going through this journey in fintech that we've been on for the last, year or 18 months or so, where things have kind of felt a little bit shaky and funding has been dropping. And I think that is very much a consumer early stage story, and that we're starting to see, a real push in the infrastructure space, and that may, pick up funding overall as we move forward.
What do you think, Miguel? Do you agree with that analysis?
It's true. It's just true. I mean, these days, the majority of fintech VC dollars go to B2B. And it's because of a combination of more founders in B2B, but also VCs, biasing towards infrastructure and B2B type of plays. When it comes to Thunes, I mean, clearly impressive. You're right, Ben, that we might be living in a world where globalization is changing, but it's certainly not going away by any means. And so these guys are it's a powerful proposition to be connected to over 100 countries and just create this seamless network of payments. And I think for a long time, investors and entrepreneurs have been talking about these amazing opportunity in cross-border. I think none of us are strangers to the numbers of the volume numbers of remittances, right? That's in the hundreds of billions. B2B cross-border payments, it's in the trillions. And those transactions oftentimes are even more expensive, right? I just paid $20 for a payment. I was so angry, but there was no other option, right? And so that's what companies like Thunes are after, right? To reduce, if they can bring it down from 20 to 5, that's a huge achievement already.
That anger at sort of international payments costs has founded so many companies, hasn't it?
I actually kind of commend them for, like, when you just look at this, you would think, wow, this timing is suspect with everything that's going on and all these, all the changes that are being discussed. But I feel like the infrastructure around this, I mean, look, there's an obvious need. It's gonna outlive administrations. Like you're building for, this is the future. Like yes, maybe it's not optimal time with the conversations and discussions. I'm sure that makes it more challenging to deal with some of the counterparties and businesses that you have to. But in the long run, this is going to help everybody.
Kate, we were just talking about sort of Nubank and sort of the challenges of sort of digital banks that have tried to come into the States, partly because of the sort of state-by-state licensing. How tough is it for someone like Thunes to come and get approval with sort of payments licenses from all the different American states? And then having achieved that, does that give them a little bit of a moat? I mean, to Steve's point, does that actually put them in a strong position for the future because they've actually built that infrastructure?
So I was looking into this a little bit ahead of our discussion, and Thunes announced plans to acquire a company called Tilia, which is a payments platform in the online gaming space, about a year ago. And I couldn't find much on its current plans, but if it's leaning on that acquisition at all, it makes a ton of sense because that is an American company. It was already licensed in 48 states. So there's a lot of synergies there that I think like it could tap into. And that's probably, if that is the route that it's taking, kind of leaning on that team, then that makes a lot of sense to me. And for other international fintechs have taken approaches like that too, where they, kind of get a foothold in an American company and use that as a landing pad to achieve a soft landing.
That would be a much less painful way of getting licensing across 50 states, wouldn't it? Just find somebody who's already done it, who doesn't really value the licenses or that you can acquire. I think Steve's taking notes. We're going to see Robinhood, picking up a few sort of investment trading licenses.
We've done that before. Like the buying entities for their licenses is pretty common. Like when, licensing requirements can they can take longer than is worthwhile when you make a decision to move into something.
Yeah, it's a great point, and you're both absolutely right. It's a well-established strategy. I suspect you're exactly right, Kate. That's exactly what they have done, but be hard to prove. Okay, and then the other thing is that the digital asset point. Do we think do we think we're going to see a lot of play from companies like Thunes trying to use digital assets to try and simplify those cross-border payments? I mean, Steve, you've obviously got a bit of exposure to digital assets at Robinhood. Do we think we're going to see digital assets playing a bigger role in things like cross-border payments?
I mean, our most of what we've done in the digital asset space has been in the U.S., but we've just recently, we're in the process of closing on a company called Bitstamp, and that's largely for they're the oldest crypto exchange in the world, and so being able to do things on the institutional side, we've largely been retail, so B2B is something that we're very keen on. And for all the reasons that we just discussed, I think there's huge opportunities there. And just the technologies, Vlad he's written a couple op-eds around tokenization and what we think that can mean for investors. The number of companies that are trading in the capital market, in our traditional capital markets, has been shrinking for quite some time. And a lot of the opportunities for early stage investing, they're not there for retail clients. You see these companies that are, hitting the publicly traded markets much later than they previously have. And the combination of that, investable assets that today it's really hard to get access to. If I want to invest in real estate, if I want to invest in some other things that we'd consider alts today, it really hasn't. It's been tried by a number of firms and with some success, but it hasn't really been done at scale. And we think there's a huge opportunity there, and the technology behind this is what's going to deliver on it.
Thank you.
And if I may add, Ben, I think if you're Thunes, you want to provide access to as many payment rails as possible. So if they see growth coming from stables, they're going to double down on that. If they see growth coming from some sort of other digital asset, they're going to double. So I think they're probably going to be a good representation of just the market in general, right? To see what rails are growing faster than others. So there's no doubt some of the growth is going to come from digital.
Miguel, we don't do investment advice on this podcast, obviously, but you did say earlier that you thought Robinhood was the kind of company you'd like to invest in given its growth prospects. Do you like the look of companies in cross-border payments then as potential investments?
Absolutely. And it's not just payments, it's cross-border services, right? Because if you have to make a cross-border payment, you need to verify who the counterparty is, right? Mm-hmm. So we have invested in cross-border payments companies. We've invested in compliance companies for cross-border, anti-fraud, right? And it's a growing ecosystem. And it's actually an area that we are bullish on. I think we're seeing more companies be founded with this mentality, with cross-border teams from day zero.
Okay, thank you. Let's move on to our last big story of the week, which is that Coinbase and Founders Factory are to launch a crypto and AI accelerator in the UK. So the American crypto giant Coinbase has unveiled plans for a new UK crypto and artificial intelligence accelerator in partnership with UK venture studio Founders Factory and crypto investors Animoca Brands and Fabric Ventures to create a 16-week program for founders to help build their offerings in blockchain and AI. This accelerator comes amid talk that the UK has missed the boat when it comes to becoming a hub for the sector. Meanwhile, in other UK crypto news, the Chancellor of the Exchequer, which is the Finance Minister, Rachel Reeves, unveiled a new set of crypto rules at last week's IFGS, or International Financial Global Summit, which was part of UK FinTech Week. Reeves said that the new legislation would make Britain the best place in the world to innovate and the safest place for consumers. Kate, do you think maybe the UK has missed the boat? I mean, when you look at the States and you look at, the obvious enthusiasm the president and others have for sort of crypto and so on, and the sort of change in the environment for sort of crypto in the States, do you think the UK is sort of a little bit late trying to catch up? And is there really any point trying to compete with the States as a destination for crypto, given the current, friendly administration?
I don't think so. I mean, I think as far as like recent enthusiasm from the administration, it's only been a few months. And I would also say, I mean, I think, laying the groundwork, like from Coinbase's perspective, getting involved in the UK is very smart, because in the US, the regulatory wind sways. So right now we're in a place where, everything is very pro crypto, it's pro AI, it's pro innovation, but there's no guarantee that we're always going to stay there. So I don't think it's too late at all. I mean, it's never too late. I think it's great to lay those foundations.
Steve, Robinhood obviously came to the UK sort of last year, as an American firm. How do you sort of look at the UK and sort of think about the UK and maybe crypto specifically in the UK? Do you see opportunities for the UK to do more in crypto, sort of along the lines Kate is implying?
Yeah, I'm kind of with Kate. I don't think in no way, shape, or form do I think it's too late. I mean, I think there's so much to be done here and so much opportunity that I feel like one geography excelling in this doesn't preclude another geography from having the same kind of success or even more success. I think we were, as Kate pointed out, we were kind of trapped for the last 4 years in just the lack of clarity. So the way we ran our crypto business was, there's a lot of uncertainty. So it's really hard to run a business when you're not sure what the regulatory landscape looks like. And, there was kind of enforcement by regulation by enforcement, which we were a recipient of some of that. So I think what we naturally did was we looked out everywhere else and said, where else are we getting more clarity? And at the time, we were actually getting more clarity overseas than we were in the U.S. Now that shifted, but again, back to your point, Kate, these things shift back and forth. To me, it's less about providing the framework; it's more about providing a stability around the framework. Like it's. I hate to bring it into the whole tariff conversation, but until people really understand where this is going to land, is it really in my best interest to make a bunch of wholesale changes and restructure a business or offshore a business or bring a business onshore until I really understand, is this going to persist? Am I going to be unwinding this in a couple of years because now we've changed? So to me, I think it's important to establish a framework and even have model or sandboxes where you can experiment and do some really innovative things. But I also want to know those are going to persist, because otherwise it's just not worth the while.
Miguel, do you agree? Is that what you look for as an investor in sort of, in particular countries? Do you like to see sort of stability and clarity, or do you agree with Steve?
Oh, it's crucial. It's absolutely crucial. It's one of the reasons why we really like Brazil as a market, and that why it's become a very popular fintech hub, very attractive from an investment point of view. It's because the central bank there is a great regulator and is actually friendly towards fintechs, towards providing regulatory clarity, right? And that drives dollars, right? At least the rules of the road. And specifically in this case for Coinbase, I think it's also about expanding their international foothold, right? The US is their main market, no doubt about that. But I know for a fact they have appetite to just get a bigger share of the international market. And London, I mean, whether you like London or not, London is still a hub for a lot of cultures. A lot of people from around the world certainly either visit London or relocate to London, right? So I think it's also a way to keep expanding the branding beyond the US, because if some of those entrepreneurs become successful right? Sounds like they're not necessarily going to be building for the U.S. market, right? They're building for, at a minimum, the U.K. European market, but most likely also the rest of the world.
Love it. Kate, one of the things that Rachel Reeves, the British Chancellor, said is Britain is the best place in the world to innovate and the safest place for consumers. Now, regardless of whether that statement is actually true, do you think it's possible for a country and regulators to both encourage innovation and be really safe for the consumer? How do you can you balance those two, or is a regulator always sort of either leaning towards helping companies innovate or leaning towards protecting customers from harm? Is it possible to sort of truly be an amazing place to innovate and incredibly safe for customers? Sorry, big question.
Oh, it's hard. It's really hard. I mean, and I imagine that this is, a question that thoughtful regulators grapple with, every day, right? And I actually think the UK has done a really good job of this, to be honest. The regulatory framework in the UK is known for being, open to innovation, fairly clear, and also, thoughtful about the consumer. So I think the UK is probably a really good example. I would say Singapore is maybe another good example, but it's really, really hard. You have to have a very thoughtful regulator, and you also have to have a centralized effort. And I think that's one of the big problems in the US is that, the regulatory environment here is just so fragmented. That it makes it really, really hard to, if it's already hard to strike that balance, right? It's already a hard question. That fragmentation just makes it even harder.
I do also think, if I could add on to that, I think for regulators, I feel like regulators that are successful embrace the industry and they learn from the industry. There's of course a knee-jerk reaction that technologies are going to be harmful to customers because you're going to use them, to disadvantage them. But they can actually be quite helpful in protecting customers and delivering more of what they want instead of just trying to figure out what they want. So I feel like the best regulators listen to the industry. They bring them in and they adapt, and they adapt their rule sets, and they adapt everything that they're doing to say, I understand where this market's going, and I want to make sure that we're going with them so that we can do our job. Their most important job, which is to protect those investors.
Yeah, that's a really great point, isn't it? Just really, regulators really listening. In this case, it's a politician, but, politicians listening too. Who knows? Okay, any final thoughts on that, Miguel?
I just want to say that regulation is important, but I think the best place to innovate, I wouldn't say it's the UK. It's probably the US at this point. You do need more than just good regulation. You need the community, you need capital, you need talent, can-do attitude, and a lot more. That's all I'll say.
Thank you. Okay, now for a quick look at one more newsworthy story this week that we don't have time to cover in full. So UK fintech Revolut has expanded lifestyle reach with mobile plans. Revolut is entering the mobile market, launching phone plans with unlimited calls, text, and data in the UK and Germany this year, plus a 20 gigabyte roaming allowance across Europe and the United States. The move is part of Revolut's push to become an all-in-one consumer app, adding to a growing list of services like crypto trading, travel bookings, and rewards via Rev Points. The company's revenue nearly doubled to £3.1 billion in 2024, driven by its diversified offerings, with subscription income hitting £423 million and interest income at £790 million. Now serving over 50 million customers, Revolut posted more than £1 billion in pre-tax profit last year and claims the title of Europe's most valuable private tech company. So I think this is really, really interesting because we've seen banks in the past like Rabobank or Bendigo and Adelaide Bank offering mobile services. But those firms didn't have anything like the reach that Revolut has. And nor in the past did customers have apps like Revolut that they could really use to manage their mobile phones. I think Revolut, having started with travel money and having a particularly strong brand among younger customers, many of whom do travel, but perhaps do get concerned about roaming fees, being able to manage and control all of that through Revolut app could be a very compelling proposition. And even if they only sell it to a fraction of their 50 million customers, that's still a large number of customers. So really impressive to see Revolut continuing with the product innovation, making the most of that customer base to cross-sell more products. So super, super interesting story. Okay, and finally, something a bit different from the world of money. So in Chicago, a security truck has dropped money bags worth $300,000 on its rounds. A Brink security truck in Chicago accidentally dropped 3 bags of cash onto the streets during its rounds. The truck's back door reportedly opened by unknown means as it drove down South Austin Boulevard. Up to 100 people quickly grabbed the money and fled the scene on foot, in vehicles, whatever, before security personnel returned. As of last Friday, no arrests had been made, according to local authorities. Now, Steve, I think you live in Chicago, correct? Are you among the lucky 100?
I am not among the lucky 100, unfortunately. But it is a funny story.
It's like that panicky feeling when you can't find your phone or wallet, but like 100 times over, right? Have any of you ever found money on the street? Kate, have you ever, had a lucky day?
I definitely did when I was a kid. I remember, as a kid being, very excited whenever you would find, $1 on the street. But I think that's a little bit different, I hope.
Yeah, $1 is different to $300,000, right? Miguel, how about you? Have you ever stumbled across money anywhere?
I wish I had stumbled into more than a couple of pennies or maybe $1 or two. But, my wife gets really excited when she sees, even if it's a quarter on the street, because she says it's good luck.
So it is good luck. It's supposed to be. Yeah.
Some people in Chicago are going to have a lot of luck.
Yeah, that is a lot of luck. Yes.
Do you think future generations are going to miss out? I mean, if we increasingly move to digital money, then future generations won't have these opportunities, right?
Mm-hmm.
So the interesting thing about this truck losing the 300,000, I mean, it seems like they need to sort of invest in some better truck doors. But thinking about what was happening in Spain and Portugal, last week, where the power system went down and nobody had any money, actually, are we going to see an acceleration away from cash, or are people going to suddenly say, hang on a minute, if the whole power network can go down, maybe I do need to keep a little bit of cash somewhere, because what if I get stuck and digital power doesn't work?
I don't know about you guys, but I travel quite a bit. I'm encountering more and more business that don't accept cash.
It's true.
And so, it doesn't feel like we're going in a direction where there's going to be more businesses that want cash only, which used to be a common thing. I'm finding more and more businesses that don't accept it.
There's a certain type of business that only takes cash, but that's a different, it's maybe more of a tax thing.
The reality is it's expensive to use cash, right? That said, at least I'm all for fintech. I'm a fintech investor. Everything I do all day is fintech. But lately, I've started carrying a lot more cash in my wallet, just in case.
That's probably smart. I don't even carry a wallet. I just use my phone. So I have no cash by definition of that. But it's a good point. It is a good point. Maybe I'll have to rethink it a little bit.
I see a lot of people who carry a little bit of cash in their phone cover. So a lot of people in Britain might have, £10 note or £20 note, just so they've got cash in case they need it. Probably, of course, gives someone another reason to steal your mobile phone. But anyway, there we go.
To that point, though, what is, $20 going to do for me if there's no power anywhere?
Buy you lunch. Dinner. But yeah, it won't get you a hotel room, will it? So maybe when you're traveling, you need a little bit more.
Right.
Okay, well, on that note, and lucky 100 people in Chicago. Sorry you weren't one of them, Steve. Let's wrap up this week's FinTech Insider News. Thank you all so much for joining. Where can people find out a little bit more about you and your companies? Kate, where can people find out a little bit more about you and CCG Catalyst?
You can find me on LinkedIn. I'm Kate Drew on LinkedIn. And you can read everything that we publish on ccginsights.com.
Thank you. Miguel, where can people find out a bit more about you and Gilgamesh?
So people can find me on LinkedIn or Twitter/X. DM me, my DMs are open. And our website is gilgameshvc.com. Plus my podcast newsletter is whatever you like to listen to podcasts and Substack.
Thank you. And Steve, where can people find out more about you and about Robinhood?
I'm also on Twitter and LinkedIn or at robinhood.com. That you'll find information about the Robinhood and about myself there.
Thank you. And as for me, Benjamin Ensor, you can find me on LinkedIn, and you can find out more about what 11FS is doing on LinkedIn or on our website or on social media. So thank you all so much for listening to today's FinTech Insider. If you like what you heard, please make sure you follow us on your favorite podcast platform. And if you really like it, please share the podcast with a colleague or a friend. If you want to join the conversation, please seek us out on social media. Just search for 11FS or FinTech Insider, or you can even email us at podcasts@11fs.com. So thank you so much again to my three guests, and goodbye.
Cybersecurity is the top concern for UK businesses, according to Vanta's recent State of Trust report. But whether you're a startup founder or an experienced security professional, Vanta is here to help. Businesses use Vanta to establish trust by automating compliance needs across over 35 frameworks like ISO 27001 and SOC 2, centralize security workflows, complete security questionnaires up to 5 times faster, and proactively manage vendor risk. Join over 9,000 global companies like Flow Health, Synthesia, and Alicabank who use Vanta to manage risk and prove security in real time. For a limited time, get $1,000 off Vanta at vanta.com/insider. That's VANTA.com/insider for $1,000 off.